All right, good evening, everybody. Let's get a sound and visual check. How's everybody doing today? You can at least hear the music. That's good. That's a good start. Sounds good. Thanks, Coach Hoop. In the chat. Looks good. Thank you. Thank you. Everyone's good. Sounds good. Looks good. That's feeling good. What a day. What a freaking day. Rough one for me, which is kind of ironic because we had one heck of a rally. And that's what I'm going to be talking about. I mean, intraday rally there. I think that would be fair enough to say. Not just a crazy rally, but it was a good move off of this morning's low. And we'll go through that. What a rough day. It's Tuesday. There's a lot to go through, a lot to talk about. And it's a new day. It's definitely a new day. TMP3 trader caught that rally on SPY 0 DTEs. Ooh, man, interesting if those probably paid out well. So let's get started. Let's get into it. Welcome to Slow Markets, everybody. I'm Coach Dakota, Coach DBA, and as always, there's our Topstep risk disclosure in the YouTube chat. Everything that I go through tonight and as everything else is for education purposes only. We all know that. And let's get into it. You can see I have the NASDAQ. Let me get the chart a little bit cleaner right there. Okay. I have the NASDAQ daily chart up and open. And let's talk about today. There's so much to go over, and I've got already a lot of questions coming in and piling in as I'm starting Slow Markets already. But let's get to the first one. Let's talk about today. So here's the daily chart. And let's go through where we are at. Not much has really changed, to be honest, in terms of the overall perspective of where we are at in the market. Here's the major move and the major rally that we've seen on the 19th. Ever since then, we've been kind of consolidating, kind of making this what is looking like a bullish flag pattern. It's looking more and more bullish and like a flagging pattern, seeing if we can kind of coil up, kind of consolidate to see if we can get a breakout up towards those 20,500, 20,600 level around this zone. But before then, let's zoom in and let's take a look at the hourly chart because I want to go over this because I had a rough start of my day and it wasn't too bad on my end. But let's go through this. I want to just talk through this a little bit in front of everybody and see if you guys have any questions. And yeah, just talk through it, go over it, and see if there's anything that we can go through and maybe set ourselves up to have a good day on Wednesday and see where we are at and what we're looking at. So before the New York session, because, you know, I was on the TopstepTV, we was trading the New York session. We did have some news. The news was what? Consumer sentiment. It was the lowest it's been in 3 years, and the market just sold off. We sold off. I was looking for a similar trade that we seen on Friday. I was looking for us to get down to these 890s, these 900s, like these lower 900s. So I was really looking for us to come down here and look for a buying opportunity. So looking for this zone in order to get in longs. And we did start that sell-off. We got all the way down to basically 950, and then we immediately rallied. We rallied 200 points plus all the way up to 20,200. However, so I was actually doing my best to not be biased to the long side. Everybody knows how much I like to buy the market and where I look for buying opportunities. Unfortunately, I was not buying down here. I was actually short at on the breakdown. I think I was at short at 30 or even 41 something. I was short on the breakdown. I didn't cover as much as I should have. And then I held and I took a loss. And then I actually started to short on a retest of resistance. So if we zoom in on a 5-minute chart, I'll talk about it a little bit more. So here's the 5-minute chart during the New York session. And yeah, here was the sell-off. Here was the breakdown. We got the pullback. I shorted this pullback and I was looking for continuation. I didn't close out of all my position, held. I got stopped out. We came all the way back up to where we re-entered. I was looking to re-enter on the test of either this resistance or this resistance, and I lost shorting the market, and it reminded me once again why I suck at shorting this market. I really do. And today was a good reminder, regardless of what I think and that we're breaking down. Yeah, I'm not the best at shorting this market. It was much easier to buy. And now with hindsight, we did have this level from the 23rd. I was at minimum, looking for this level here at the 38. And then, of course, this very next one, looking for buying opportunities right here at these 880s. We didn't get there. We got to this one, and it looks like we just barely ticked under it by 1 or 2 points. And then it just straight up, just immediately straight up. And the funny thing is, guess what? Everyone was calling this out today, which was also interesting, a 3-bar reversal. And the reason why I didn't take this 3-bar reversal probably as much as I should have, now that we have hindsight, right? It wasn't a very strong trend right here because we were just consolidating, and then we got this 3-bar reversal. Yes, and it played out beautifully. If somebody was entering long based on this 3-bar reversal, that was a beautiful trade to the long side. I mean, this is something I love. You very rarely get a trade like this. And then look at this from a 5-minute chart. How many green candlesticks in a row did we get? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, almost 15 candlesticks, 5-minute candlesticks in a row. That is something you dream about as a bullish trader, as a perma bull. You dream about moves like this in terms of looking for a 3-bar reversal and then straight up. Which kind of sucks because usually I get into this 3-bar reversal and I get chopped up and we don't see like something like this. However, yeah, just because we're kind of just consolidating, chopping, we just ticked and broke through that level. And I had a couple levels down here I was thinking about the consumer sentiment, which was incorrect, right? It was definitely incorrect for me to think about, wow, consumer sentiment is at a 3-year low. We could definitely see a continued sell-off because regardless of what we think the market's going to do, based off of what's happening around the world or any news, the market does whatever the heck it wants. And sure enough, we rallied, right? Yeah, now with hindsight out of the way, I did take my losses going on the way up, trying to short this market. And now that we look at it from like a bigger perspective, now that the day's over, we look at this and say, you know what? Buy the freaking dip, right? The trend is up and to the right. And even though I didn't get as deep as we wanted to in terms of buying the dip, it was a dip nonetheless. And this is why I'm okay. And this is definitely one of the reasons why I am okay with taking a small loss buying here, taking a small loss buying here, taking a small loss buying here. And then when you catch a move like this, the winners outweigh the losses. And so you guys probably see or hear this all the time. It happened to me on Friday, right? If you guys remember Friday's trade where, taking losses on the way down and then just make up for that and then more on the way up, which today was just a very textbook day. And yeah, I was just thinking about trying to short the market, I don't think I broke my strategy because I followed my strategy on point with how I get in and get out of the markets, but I broke my bias in terms of how I like to buy the markets. And with hindsight capital, sell high, buy lows, and here we are again. So anyway, that being said, yeah, this was it's easy now that hindsight, an easy buyer's market today. I mean, I look at this at the hourly chart. I mean, look how beautiful this wick was. We sold off. We came back down here in this zone. Beautiful buying opportunity. And sure enough, once again, we came all the way down into this zone that now was a beautiful buying opportunity. Sell the highs, buy the lows. What a beautiful market to be in, right? Yeah, that dang news. We were actually buying the market this morning. Like before we broke down, we were buying this. We were buying up here, I believe, and then we broke down, and yeah, the rest is history. But that being said, look at where we are at tonight. We had that major reversal today during the New York session. We got up to the 20,200s. And we pulled back. It looks like during lunchtime. We pulled back down to 20,100. We rallied up all the way back up to the 190s. And now here we are. We're sitting at 147s. And where can we go? The first thing I want to see, and the first thing I want to point out, is this wedging pattern, right? I mean, it's not perfect. It's a zone. And this is a definite flagging pattern, whether you want to measure it like this. I mean, it's a zone, okay? This is definitely a zone, and this is it's starting to look like a textbook flagging pattern. We will see. It is the NASDAQ, and it tends to be a lot more whipsaw, a lot more crazier than just, patterns don't look as perfect every single time. And so this is starting to look like that. We're making higher lows. We're finding a lot of buyers stepping in and pushing this market, continuing to push these 20,200s. And if we break, we're looking at that higher time frame, 20,500 to 20,600 is going to be some of my targets and something that I am going to be looking at. Could we see it tomorrow? Maybe sometime this week if we do start to break out. That's going to be something I am definitely watching. Now, that being said, where could we go in this market tonight or overnight, maybe even during the London session or tomorrow? Well, so far, you don't want to trade a pattern that doesn't exist, and we want to trade what's in front of us now. And so far, the way the market's doing is you sell these highs and we look to buy these lows. And yes, it's a bigger zone on the long bottom side because of all these wicks. And yeah, I could see us pushing back down. I don't know if we could push all the way back down to 20,020s. Are we going to get to 20,000 level again? It wouldn't surprise me if we sell back off down here into this zone again to where we stay range bound. We're range bound, we buy the lows, sell the highs, and you do that until we break out, right? You trade the pattern until it breaks out or the pattern changes, and I think that's going to be more of the same. Now, the pattern could change at any moment. It looked like today during the afternoon, it looked like today we were going to break out really quick, but we didn't. We held this resistance. We're finding some sellers. We're sitting here at 145. And this is something I'm going to be watching going into tonight and tomorrow. So we'll see. We'll see if this market will continue to either sell off tonight and tomorrow to see if we could see these 20,040s, maybe 20,000, that big psychological number, or if we can find some support. Maybe we even come down and find a higher low, right? Maybe we could even see something like this. And then we look for this pattern to continue, and maybe we could get a breakout to the long side. I would love to see something like this, another opportunity to get into this market and see. I want to be one of those traders, and this is something that I really would love to see, is getting into a decent position and holding a trade to see if we could break out to the long side. And that being said, I'm not saying holding a trade as I'm just going to buy it down here and I'm just going to hold the whole entire thing. I talk about it all the time during slow markets and during the New York session. If we happen to get into a good position, say we get into 3 contracts, we start to rally. I close one contract, say halfway through, one contract up here near the highs, and then it's okay to hold one contract and trail it with a stop loss. I love trailing my stop loss. I absolutely love it because then you never know when you could have these major breakout trades or these major trend days, and if you happen to get into a good position, you want to take full advantage of it. Anyway, that being said, that's what I'm looking at on the NASDAQ. Any questions on all this? JB, ICT called that rally today. He called this rally today. Hopefully he took advantage of it. Yeah, traders who've seen this come, man, that was beautiful. If you were able to take advantage of this, great. Days like this are just like Friday, just like the 23rd. This is what it is. Looking to buy the dips. Every time we sell off, beautiful buying opportunities. Why not go short now? Yeah, that's what I was going to be talking about, is for a slow markets trade, is if you believe this resistance can hold, and you do believe that maybe we could sell off down to this zone, or even sell off down to here, right? There's a lot of support in this level, or wherever you want to put your target, somewhere or support. Yeah, that's very realistic. It is selling, not selling now, right? Not saying, oh, get in right here, right now, and just sell it, but finding a way to get in short. It looks like we did open up at 20,180s, and we had a little bit of a reversal here. So yeah, there's an argument to be made that we could have been able to short a 3-bar reversal, some type of consolidation here, and get into a short, right? And then have some stop losses up a little bit higher, targeting some of these lowers over the London session, because we know during the London session, the markets could definitely move. Heck, even during the Asian session, the markets could move as well. Traders. Oh, I love the chat. And maybe one day, like I said, I'll be having like other traders on. Tomorrow I'm going to be having Coach Jay, and I'm always going to be looking at having guests. Maybe one day we could continue to have more guests on. Let's take a look. 1 second, guys. Replying to a message. Let's get to a few questions here. Then we'll take a look at oil. Okay, let's take a look at oil, and then we'll bounce back at the NASDAQ. Okay, taking a look at oil. Oh, this is the 1 hour chart. Oh, well, that was a buying opportunity in crude, right? Oh, let's see. Where are we at? Where were we? Where were we last night? We had a rally from last night, right? Sure enough, that's where it was. This is where we were at last night. And here's a good example. I mean, yeah, the trend is your friend here in crude. If you guys remember what we were talking about last night in crude, that was it. I mean, this crude oil is following this channel, and yeah, that was a beautiful, that's even looking like a beautiful 3-bar reversal right there. Like, that is a textbook 3-bar reversal on the 1 hour chart. And yeah, trend is your friend. We didn't even, I think we were talking about this last night to see if we could find, maybe another push down and then a rally, but no, we just rallied. And so now the next question is, are we going to sell down to maybe some 71, 70, 50 and look to make a higher low? Because that's what we're doing. Higher low, higher low, higher low. Maybe look for an opportunity to get into a higher low and then continue this trend, because yeah, selling up near the high of this channel, buying down to the low has been good for this past, 2-3 weeks almost. And so I don't see this changing. We're right in the middle. And so this is a hands-off trade for me. Not looking to buy or sell oil here in the middle of this. I would much rather wait for us to either get down to the bottom of this trend or this channel, or get to the top of this channel, maybe $73 a barrel. I could realistically see $73 a barrel coming into play. The matter is, how do we take advantage of it? So that is what I see on oil, right in the middle. Not going to play around with it here. It's just being patient, waiting for us to either get a buying opportunity, or if we do rally, maybe some smaller short scalps if we get up to those highs. Let's take a look at Nikkei. How did Nikkei do today? Oh, Nikkei. Did we get as crazy of a move on the Nikkei as we did the NASDAQ? Not really. Not really. Interesting. Nikkei was a little bit more tame, it looks like. Just looking at today, we had this huge move from the 19th to the 22nd. So really big rally. Now we've got a bit of a pullback. So I've seen the Nikkei do this before. I've seen the Nikkei do this before, especially during trending markets. And we don't have too many examples here in the past, but what I have seen, let's see if I could pull this up, is this is kind of a flagging pattern sometimes. What I like to do is almost the exact opposite of crude oil, okay? So think of crude oil when I'm analyzing the Nikkei is, we're in this channel and looking to buy when we start to sell off and we get to the bottom of this channel. And then, either that, there's a nice little support zone right here, right around, 630s, 660s, 670s. So this is a nice zone. It looks like it became support again. I would be okay if we maybe come down and test this zone. Maybe we can break through it and get to this next zone right around 37,300. But buying, I'm looking for opportunities to buy. And then what I would also love to see is, maybe we miss out an opportunity to buy, or we are looking for a breakout. So also looking for a breakout, break above and break through this resistance trend. So looking for maybe a bullish flag, some type of a breakout to the long side. And if we do, that would be my entry. That would be my trigger right as we start to break through this. And then, of course, risk management, having our stop loss, whether it's going to be a tight stop loss down there or a wider stop loss. And then looking for either a retracement and a test, and then a continuation. That's what I'm going to be looking at. Now, remember, this isn't like short-term scalps. This is something where I'm looking, you can see this is a period of, 2, 3, 4 days. And so this consolidation is already 2, almost 3 days long. And these are moves that I'm looking at in terms of days, not hours, not minutes, but days. I'm looking and I'm doing this analysis based off of days. And then once I do my analysis, I kind of get a biased understanding from kind of the top-down view, and then I trade around it. And then what I'll like to do is I'll do my analysis, I'll zoom in to a shorter time frame, say maybe a 5-minute, for example, and then I trade. And then I trade based off of that. Yeah, tonight it looks like we did just break through that. We came down. Looks like maybe we're testing it, and then are we going to see a continuation up to the upper side of this channel? And as we start to zoom in, you could, I say this like Google Maps all the time, right? Where we kind of see that. Do we come back up and test the upper side of this channel? And so I love to trade around higher technical analysis. So like higher time frame technical analysis, and then I zoom in and I trade around that on the smaller time frames. Now let's take a look at gold. We do see, like I say, each night, right around 8 p.m. Central, we do see a spike in volatility of gold. Gold, man, gold is something else, guys. Gold is something else. Patty AAP, oil trade. We're not supposed to hold trades for more than 1 day. How can we take advantage of this one? Patty, the idea is to get an overall bias. I don't want to say overall biased, but you want to know what the market's doing on a higher time frame. And in order for us to trade efficiently and maybe take advantage of bigger moves when they do happen and get in with the trend, right? Get in with these moves. And in order to do that, you have to analyze and take a look at the bigger picture, whether it's an hourly time frame, whether it's a daily, whether it maybe a 15-minute time frame could be your bigger picture, just depending on how you're trading. But when you do that, you can align your trades with the bigger picture. And that's really what you want to do. You want to align your own trades that you do, on a day-to-day basis, day trading, with the bigger picture. So that way you don't get surprised where, take a look at gold. What's the bigger picture doing in gold? We are rallying. We are going up and to the right. And sure enough, that was the trade where you're buying the dip. And here's an example, okay? I think it was last week, 2 weeks ago, Coach Jay and I was on here on Wednesday. And we were looking at this as a bullish flag. And we're like, this looks like we could break up and we could break through this. And you guys know, How long have I been calling out 2,600? I was saying I could see gold to 2,600. I could see gold to 2,600. If we break this, I could see gold to 2,600. So because I'm doing the analysis on the daily time, on the higher time frames, like an hourly chart, on a daily chart, okay? So I'm doing this on a higher time frame. So when I do start to day trade and I say, I want to say let me get this adjusted. Sorry. And then I start to day trade on a 5-minute time frame, and I say, okay, the overall picture, I could see gold getting to 2,600 and going bullish, right? So on the smaller time frame, when I'm looking to day trade, I want to align my day trades and I want to align my trades to the long side. And so, if I now think that gold could get to 2,700, right? Then I'm over here trading and I'm thinking, I don't have to think too much, right? Then I'm simplifying my trading. The less I need to think about and the less decisions I need to make, the easier it is on my own and the easier my trading can be, or at least my decisions and my money management. And yeah, say if I'm bullish gold on the longer time frame and I'm looking at the 5-minute time frame, that's it. I look for areas to, for example, where do I buy it? Now, I know that's a very simple way to say it, and sometimes I joke about it, right? When I get on TopstepTV and I joke and I say, where do we buy this? Where do we buy this? But I kind of serious, and I'm being serious, where, hey, it's buy the dip. I should have done that today during the New York session. I'm like, the trend's up. I could see us getting, and I can't believe I even said that too. I was like, yeah, I could see the NASDAQ getting to 20,500. And then we started selling off. And then I should have said to myself, like, where do we buy this market? Because, on the higher time frame, I want to be a buyer. I don't want to be a seller of this market. And maybe we could think the same thing, say, for gold, for example. We are trending up. You want to be a buyer of this market at, buying the dip, buying consolidations, buying pullbacks, buying breakouts, whatever your strategy is, the overall trend is your friend. I mean, that's used a lot, right? The trend is your friend. But yeah, then you look for opportunities. Do you buy a breakout to the long side? Maybe we want to put a buy stop to get in long. Maybe we want to wait to see if we could get a pullback to the bottom of this consolidation and look to buy it at the bottom of this consolidation. And yeah, I hope this is making sense. Sometimes I experience that same thing. Oh, look, wow. There's a nice, as I was speaking, right? There goes a nice bounce in gold. But yeah, sometimes that's what it takes, is a step back, step away from the charts, especially if you either had a negative day, a bad day, you say you hit the daily loss limit, to step back, reanalyze everything, try and maybe you go take a hike, take a nap. I took a nap today and took a look. I did take a look at the markets on a higher time frame, and I'm like, man, missed such a beautiful opportunity. And reanalyze it, because trust me, anybody who's been trading, they go through days like that where maybe they're not reading the market 100% correct, and then they could, with the power of hindsight and some rest, they could review the markets and say, okay, we missed some amazing opportunities. Let's keep that in head. Let's continue staying with your strategy and then move on to the next. Look at this. Look at gold. Yeah, there's a perfect example right here in front of us. Yeah, there's an example, right? The trend is your friend. We're looking at the markets and we're looking to, where do we want to be a buyer of this market? And that's exactly what we're saying, right? We want to buy a breakout or, a reversal on a pullback. And sure enough, there it is. There was that breakout right there. Yeah, interesting. Right, what is it, 8 p.m.? Is it 8 p.m.? Yeah, right at 8 p.m. Let's see. Let's watch this market. We could watch it for a minute. I don't mind watching it. What a move. What a move on gold. Nice sell-off, consolidation, and then a breakout. So let's watch gold for a little bit, and I can answer some questions. Give me a moment. Let's see. Any questions? Let me know. Let's get through a few of these. Okay, here we go. How much is the Nikkei correlated to the NASDAQ? I don't look at the correlation. It doesn't mean that the Nikkei, which is the Japanese market, and the NASDAQ, yeah, a lot of times I do see the Nikkei kind of go in line, but I don't know exactly how correlated they would be. I'm sure you could find that question. Maybe Jay or I don't know who. That is an interesting question. I don't look at the correlation, so. I hope that makes sense. Does the 3-bar reversal apply on any time frame? Yeah, markets are fractal, so I will say that the 3-bar reversal can apply on any time frame. However, the higher the time frame, the more reliable it is. For example, this is a 1-minute time frame. 3-bar reversals are not that great on a 1-minute time frame. Well, if you compare that to a 1-hour time frame, 3-bar reversals on a 1-hour time frame are more important. And then you could switch it to a daily, and then you could say a 3-bar reversal on a daily time frame is even more powerful. So I would say the higher the time frame, the more powerful, the more dependent. I don't know what the right word is, but the more significant it is. Maybe the more significant is the right word. Does trading at all-time highs require a different skill set than where well off the highs? JD Triggerman, that's an interesting. Trading at all-time highs, does that require a different skill set than where when we're off the highs? I would say not a different skill set. And understand this. The markets change. Market conditions change. We can be at all-time highs. We can be 3% off all-time highs. We could be 5% all-time highs. We could be 10% all-time highs. We could be in like a very slow consolidating market. I mean, there's going to be a lot of different market conditions, a lot, especially within a period of 1 year even. Like this year, we've went through a lot of different market conditions this year. I think we've went through like 3 of them the past 2 months. We've went through crazy market conditions. We've went through very slow and boring market conditions. A rollover is also different. So yeah, I will say it doesn't really matter whether we're all-time highs or we're off the all-time highs. Each is a different market condition that as traders, we have to learn how to adapt, learn how to trade it, and overall manage risk. Okay, it's managing risk, it's managing money, and that's what we are at the end of the day. We are money managers, managing risk, trying to put money at risk, looking for a what do we call it? A positive expectancy, and yeah, that's it at the end of the day. And the market conditions will change. I've went through the July as well, right? I struggled through July and a little bit of August. Now I'm back at it. Markets were good, and I'm trading good, right? Made $186,000 in the spring, struggled in the summer. I'm up $150,000 the last month and a half, and then today I struggled a little bit. So different market conditions, we always need to change and adapt and manage money going through there. AP, what are your favorite hours of the day to trade? Right here, right now. Right now is my favorite time to trade, 100%. And I'm watching these markets. I'm talking to you guys, and let's take a look. This is my favorite time to trade because it's slow. Well, mostly it's slow. It's not always slow because can get very crazy, but I absolutely love slow markets. Liking higher time frame trades, liking to put orders on overnight and let them play out. I kind of just, I do like a long here on crude oil, but I need to be patient and wait to see if we get, as much as I want to get long on crude, I'm going to be patient and wait because, yeah, right now I can see a possible break above. If we do break above this, maybe we see a continuation up to 72 and then maybe a breakout. But yeah, I'm just going to wait to see if we can get down here, regardless of if I want to get in long. How long do you hold your trades on average? During slow markets, my slow market trades that I'm going to see if we could get one tonight, 4 hours. 4 hours. During slow markets, my overnight trades are about 4 hours average, right? Some of it might take an hour. Some might be 6 hours. Heck, some was like 5 minutes. There's been somewhere like, what was this, a few nights ago? We were long the NASDAQ. I think we were long down here somewhere. And overnight, we just rallied, broke through it. And it was only like 30 minutes. Double bottom on the NASDAQ. Oh, yes, I see exactly what you're seeing. I like it. Yeah, I do like that. Good call out on that. So here's the NASDAQ. Let's take a look at this, because I see a possibility for a trade. Let's review the NASDAQ a little bit more in depth. So we've had this huge rally, and now we're seeing kind of this. There's a lot of support here, and maybe we're finding support here again. And yeah, the question is, are we going to go back up near these highs? Let's further analyze the NASDAQ, because I do like a long as we start to sell off. I'm going to go ahead and hop into one. Let's get into one. I like maybe like a trade like this. That would be something. This would be an idea, right? I'd be okay with this type of a trade. And if we do start to rally, maybe I could even push up my take profit further. There's also ability to get into, let's see. Yeah, let's do this. I'm going to get into 2, and I want to set this up as an example. Remember, this is not a signals class. I want to do this as an example. Let me get into 2. If it will give it to me. Markets always look good when they going which way you want it. Yeah, these are minis. Minis, micros, doesn't matter. For this example, I want to show it. Let's go. Okay, so while we see if this will fill my second one, I want to give this as an example. There we go. So what we can do is something like this. Is if we believe that this is a double bottom, and let's say I want to get in long, and we get set up, maybe it was a 3-bar reversal. It looks like maybe a 3-bar reversal consolidation breakout, maybe on the 3-bar reversal on the 15-minute. You could always change. Yeah, I don't recommend changing time frames, because you could most likely find what you're looking for if you change time frames. Stay consistent. If you're using a 5-minute, stay on the 5-minute. But yeah, I don't like changing time frames. I'm going to stick with this 5-minute chart. Maybe we're looking to get in long. We're seeing that there is support here, and we came down. We sold off from the highs. If we look for support here and we want to get in long, I'm going to have my stop loss below this previous pivot, and then I'm going to start looking for profits. And this could very well be a slow markets trade, where I could have one take profit for if we come back up and test. It looks like there was a lot of resistance right there in the 70s. Yeah, there's a decent amount of resistance and support. So I would be okay with one take profit here. So a sell limit for one take profit. And then I could even put a sell limit for higher. So I could even do a sell limit for right there. So this is a good example of a slow markets trade where I would be okay with letting this run overnight. I set it up. This is a good trade setup. We take a look at the higher time frame, and we were bullish, right? We were bullish on the higher time frame, saying it, if this thing does break out, we could see 20,500s, and positioning ourselves in the direction of this current trend. We had that huge rally. Even though, right, keep in mind, if you are bearish and you believe we break down, just do the opposite. If you believe we could break down and retest some of these lows, you do the opposite. Maybe you get in short using a sell stop to get triggered into a short, like right where the stop loss is. So instead of my stop loss, maybe you're not in a trade, maybe you just get in short like that. Boom. As soon as it hits this level at 135, right where my stop loss is, you get in short, and then you look for a continuation to the downside. Like that's also a trade, right? That's reasonable, and based on the higher time frame, that's also a possibility. We're kind of in the middle. However, I do like the longs here. Another thing that I'm actually liking now that I look at this a little bit more, take a look at this. Resistance. There was support there. There was major support all throughout this level during the afternoon. We came down, and now we're starting to see support again. So question is, does this resistance become support? This is an interesting level, 140s. This is quite the level. Now that I'm looking at it, this is a zone. You can see where it's hard to pinpoint an exact level. This is a really good zone. And so let's see. Let me talk through this trade a little bit more. So this is one option. This first trade looks like a good 1.5 to 1 risk reward. So, so far so good, 1.5 risk reward. The second contract is definitely, looks like a 4 to 1, maybe even more than a 4 to 1. Let's see. I'm going to measure that. So we would be risking 15 to make 60. So that's about a 5. Yeah, about a 4 to 1, right? 15 into 60. Man, my brain is not mathing today, but in terms of risk reward. And also there's an argument to be said. Maybe you just don't have a second take profits and you leave a runner on. A lot of times where I get into a good position like this and I could take profit for one at a good 2 to 1. Maybe I decide to have it up here because I do like that there is some resistance right there. So maybe I can have my take profit there, or you could have a take profit here, just depending on what you're looking for in risk reward and how you're viewing this in particular trade. I'm going to keep it here. This is where I'm going to keep it, mainly because I've seen that major resistance earlier. And so right here would make sense to me. I'm going to move it down just a tiny bit. And so this does two things. This will eliminate risk. Okay. This will eliminate risk because if we do rally up and it hits my first take profit, well, then I'm in a risk-free trade, right? I'm actually positive. So I'm risking on this one contract, I'm risking 15 to make 22. So I would already be net 7 points. I'll be net positive 7 points if it hits my first take profit, assuming it goes down and hits my stop loss. So if it goes up like this, hits my take profit, and then it just sells off, I still made 7 points if I leave this one running overnight. However, sometimes, maybe it comes up, I wake up in the morning and it hits my first take profits and we're here, right? Maybe I could wake up. A lot of times I wake up, I'm still in the trade. I could manage it and I could decide, do I want to move my take profit? Do I want to close it? Do I want to move my stop loss? Whatever I wanted to do. And, every once in a while, not very often, and it's not something I plan on, every once in a while, I wake up and we're up, 200 points that rallied during the London session. So sometimes that happens. Would I use a trailing stop overnight? No, I don't like using trailing stops. If automated trailing stops, it's just a personal thing, personal preference. Is it wrong? You can. I mean, you can. To me, I like to have a true risk reward overnight. Oh, wow. See, there you go. Shorts are paying. There are some stop losses. That got smacked. But trailing stops. I like to trail my stops manually. I like to trail them with a reason. And to me, automated trailing stops is very hard for me personally to manage because, yeah, where would you trail your stop, right? I like to trail my stop with reason. For example, I don't know. Let's take a look at the 1 minute on the NASDAQ. I want to give a good example of why I don't like automated trailing stops, and it's purely just on the way that I like to trade. So if I got long here on the New York session, let's just say this. This is purely a hypothetical. If I got long the NASDAQ, say at this reversal, just some magical reason, I had an amazing trade, I got in long, and I said, okay, I want to trail this because I'm in a great position, and then here is my stop loss. I'm going to make this one red for my stop loss. I want my stop loss where there's a reason. And to me, the reason why this stop loss would be here is because there's a pivot point. There's a little bit of support. There was support here at 53. So that makes sense for my stop loss. And let's say we start to rally. The next reason would be right there. I would want to trail my stop loss below that previous pivot. However, sometimes an automated stop loss, I don't know how they work too much because I don't use them very often. But if an automated stop loss will automatically trail it, and if it does, say your stop loss is right there. It's like, well, what's the reason for their stop loss being there? There's no technical reason because to me, it's all about technical trades. It's technical analysis. You get in the market for a reason, you get out. However, maybe you have a reason. If you do have a reason from a technical standpoint on an automated system and you could do it consistently, there's nothing wrong with it. But yeah, so for me, it would be there's the reason. We start to rally up. We start to rally. Man, this was one heck of a rally. Yeah, it's hard to show a stop loss on this market. Yeah, it's hard to see, right? Like maybe trailing it below the lows. Pivots, looking for areas to trail a stop like this. But it'd be very hard to do that. I mean, this was a bad example because an automated stop loss probably did really well on here. But in a choppy market condition or overnight, it's very hard to tell. I mean, take a look at this, for example. We are just selling off. Wow, what a market. Yeah, there's a good example of if you're looking to short this and you're looking for us to sell off to the downside. So, yep, there's a good example. So, shorting this was definitely the play. Yeah, look at this, becoming resistance. That is a good resistance right there. And then looking for us to move down to the bottom. There it is. Yeah, maybe we see this continuation to the downside, down to 820. Why would you think down to 820? That is quite the move if you see down to 820. I actually got stopped in profit before the break on both sides to 125. 20,125 got hit. 125 got hit. That's down here. We're pushing. Yeah, consolidation. So shorts are, wow, that was a great short. We could very well continue this. Where's the New York session close? Let's take a look. Let's see where we're at from the New York session close. Let me take a look. We closed, that's not too far off. The New York session close was, yeah, we're not too far off. It was basically there. I'm going to change this to green. And where did we open? I mean that's not too far off. That's where we opened up. There's the New York session. We are, I don't want to say only, we're about 50 points, 0.25% from there. We are about about 0.25% down overnight. Not too crazy. Let's take a look at the Nikkei. What's the Nikkei doing? Let's take a look. Not much. I mean, we're starting to sell off in the Nikkei. Let's take a look at the 5-minute. Yeah, I mean, hey, the markets still look green to me. Is that what you're getting at there for Dakota's version of green? Greg? Because I'm colorblind? Come on, man. Like this way. Nikkei's still not broken down. Can we see the Nikkei break down? Let's take a look at gold. What's gold doing? Yes. Yeah, if we Alt-I, gold is just consolidating. Gold hasn't moved since we've broke through that. I mean, that was just the move. Gold hasn't pushed lower. So far, yeah, it looks like the NASDAQ's just pushing right back down into this range. Let me take a look at NASDAQ again. So, well, let's watch it. I was thinking that maybe we could get a bounce off of that and maybe look for a continuation and break those. But, yeah, let's watch this. I'm not too inclined to trade. What a mess. What a mess. Looking to see if we can maybe rotate back down towards the 20,000. That's going to be interesting to see. I don't know if we could get all the way down to 20,000. Definitely there's a lot of traffic right there in this zone. So maybe 20,075. Matthew, you're long and your stop loss almost got hit. You're long the NASDAQ. Your stop loss almost got hit. I'm sure there's stop losses right here. I'm sure there's stop losses at 107 because look at this. Take a look at that wick. That wick happened today around lunchtime. So I mean, there's most likely going to be some stop losses down there. And it's slow markets. Anything can happen. I don't want to get this. My stop loss got hit for this example. Yeah. You're going to hit it harder? Long Nikkei with a tight stop loss almost got hit. Anchored VWAP from yesterday is 108. 108 for an anchored VWAP. How was the session with the man himself of the anchored VWAP? How was that? Did anybody watch that? I'm curious. Let me know in the chat if anybody watched it. I'm going to see. Not yet. Not yet. Well, it's recorded, so don't. If you are trading the anchored VWAP, or maybe if you don't know what indicator to trade with, watch it. Coach Jay, yeah, Brian Shannon is an amazing trader. I mean, he's the pioneer of the anchored VWAP. I would recommend rewatching it. Sound like a book sales pitch? Just watch it. Maybe I need to watch it. Watch the recording. I was taking a nap, to be honest. I was taking a nice, much needed afternoon nap. But yeah, and to be honest, everybody, I don't recommend indicators. But if I would ever recommend an indicator, I would recommend something simple, something straightforward. It's not a lot of craziness going on with a simple moving average or something like an anchored VWAP. So yeah, maybe just watch that one. I don't want to recommend anything in terms of an indicator, but maybe you could try it out. Maybe you can definitely try that one out. I'm gonna have to take a look and watch and rewatch it. I don't typically have indicators on my charts, but it'd be a fun conversation piece. Cody is just sticking about anchored VWAPs and moving averages, keeping it super simple. Yep, that's really what you need to do. Just keeping it super simple. Currently no open market participants. And key reversing again. Yeah, I mean, it's slow markets, guys. Chop, right? Huge spike down and then right back up. I wonder if we're going to reverse that entire move. We could, realistically. We might even see a push back up to these 41s. Brian was always doing vids when he first started trading in 2008. Ooh, there you go. Quite a lot of experience trading. That's right around the year I started getting into trading. Anyway, let's keep it going. I'm going to take a drink and let's get to some more questions. Let's get some questions. Let's take a look. Did I just get rid of that? There we go. There we go. Would you ever do a reversal at your stop loss and sell 4 contracts? Yes. Sometimes I do it. Very rarely. This could have been an occasion. So the question is, would I ever reverse at my stop loss? And my answer is yes. Yes, that is a very realistic thing to do. I typically don't like doing that in the middle of a range like this. So it's very hard to reverse on here, like in the middle of the range. Sometimes I like to do the opposite, maybe up at this zone. Okay, so here we go. Let's say I'm trading. And the question is, would I ever reverse at my stop loss? And my answer is going to say yes. If I am playing a breakout to the long side, now this is purely an example, and let's say I got in long here. Okay, say this is where I'm in long, and I'm looking for a move and a break up to the long side, up further. Maybe I'm looking for a push to 200s, and I'm in long. Say I got in right there. If we start rallying and I trail my stop loss, and let's say I have a trailing stop loss and say I trailed it to there, yes, this is a valid setup. If it hits my stop loss, I would be okay getting into a short. Very rarely do I do it, but yeah, getting into a short, say I'm trailing it up right here. See, off this candlestick, off this candlestick. This is a big candlestick. And if I seen this happen and we start to sell off, as soon as it hits my stop loss, then I would say, okay, it's valid, it's fair. It's technically a 3-bar reversal, and my stop loss for the short would be right there. So that is definitely a valid trade, because what do you do? If you hit Alt-I, you can take a look. Okay, that's a 3-bar reversal, right? Even if you're looking at it from the long side. And look at all these green candlesticks. Like these are like 1, 2, 3, 4. Like there's a lot of green candlesticks in a row. Yeah, look, 1, 2, 3, 4, 5, 6, 7, 8, 9 green candlesticks in a row. Looking for that. So you guys catch that joke? Oh, you see red? Those aren't red candlesticks. These ones are green ones. Yeah, these guys. These are green to me. I'm joking. I found out last week that I was colorblind. Okay, guys, come on. Yeah, I found out that, yep, I am colorblind in the colors green and red. So laughing at my own thing. So yeah, it's unfortunate. I mean, I could still see that they're red. Okay, I know that those are red. I know that these ones are green. But yeah, you guys know that. Yeah, it's pretty clear and obvious, but it's fun to make that joke, and it's kind of ironic, right? It's definitely ironic that we're looking at red and green candlesticks, and I'm colorblind to red and green. That now explains the house trade. Oh, come on, Black Swan. I should have been buying, right? So how does that work if you can still see them? I mean, it's just different shades. I don't know. Maybe I need to, does that justify handicap parking? I don't know. I don't know. Supposedly it's fairly common, but yeah, I can't see red and green. I think I went over it yesterday. So watch slow markets from last night if you didn't. What's your thoughts on Hikinashi candles? I haven't traded them for a while. Yeah, the house account was actually green today. 50 Shades of Red. Oh, come on. All right, let's keep this PG. I know it's been a long day. Let's keep going through it. Not really much happening in these markets. Dakota, I know your live account hidden strategy. Okay, hit me with it. What's my live account hidden strategy? I'm very curious. It's the same thing I do on here. I'm curious. What's my live account hidden strategy? You guys see everything I do. What colors are my candlesticks? Come on, we're not talking about fire drill, higher time frame. I mean, more probable trades, fire drill, higher time frames. Oh, come on, guys. It's not bad. It's not that bad. It's really not that bad as what it sounds. Buy low, sell high. That's the strategy. Take a look at this NASDAQ. Yeah, here comes all the posts. I see that, Andrew. Here's a good question. Now let's get to some true stuff. I am having trouble understanding what my edge is. Can you please define what an edge is and give your edges as an example? Also, do you have like a playbook of different trade setups? Okay, T. Username just shows T in the chat. This is important, and I think I'm sure a lot of you guys have the same question. Okay. Here is the exact same question. So I'm just trying to word this in a different way. It's essentially, as a trader, how do we recognize what our edge is? Like, what's our edge? How do we know what our edge is? Do we have examples of what our edge is, or what's a playbook, or what's this, or what's that? And outside of me going through examples, because I go through and I analyze these markets each night, I think it's more important to talk about what makes an edge for a trader. I don't know if edge is the right word. I think if there's absolutely anything that all of us as day traders, investors, just in general, what we're doing in these markets is it's money management, right? No matter how you look at it, money management is going to be our edge. And I say it's our edge because it's every one of us that should be one of the number one, I guess, advantages that sets a new trader apart compared to a trader that's been trading for a very long time. A consistent, profitable, a long-term profitable trader is going to be number one, money management. So that is going to be the edge. I'm going to have to say is money management is number one, and then number two is keeping things simple. There's an advantage to keeping things simple. The simpler you can make your trading strategy on getting in and getting out, and also managing that money, and then like right there in the chat, I don't know. I don't want to try and pronounce your name, but having a trading plan. So just having a plan is an edge itself, where keeping it simple, managing risk, managing money, and then having a trading plan. And that's it. That's basically the three main things, right? You could always adjust your plan. Your plan should very well be adjusted. You guys see me take losses all the time. I take a lot of losses. I take more losses than I do wins. Lots and lots and lots of losses. I've gotten used to it. I hope that makes sense. My edge out of anything else outside of money management is going to be, I'm a good loser. I lose a lot, and it's small. Sometimes I've made a few mistakes where I've had pretty big size losses, but yeah, I don't mind taking losses and losses and losses, and then looking for decent trade setups and having a good risk reward. And you guys are going to see it tonight, I'm sure. So let's prepare that. Trader statistics, and we could continue to talk about it. So if you want me to review your trader statistics, post them in our Discord. We have a Topstep Discord. I have my own channel. It's Coach Dakota. Post your trader statistics in there, and let's review them. And I could start talking about, we could talk more about a trader's edge, right? So let's take a look at this one. Give me a moment, and we could review that. We could talk more, and maybe we could talk about examples, okay? Because I think we're going to see some examples here. So here's one of them. This is an express funded account. This trader is up $9,000. And yes, what would this trader's edge be? Looking at it from the statistics. So this trader simply has a higher trade win percentages. So, about a 1-to-1 risk reward, really good at identifying trades, having high probable trades, 81% winners. It looks like it's a good 2 weeks worth of statistics, good risk management. Let's take a look down here. Mixed when it comes to holding your winners and your losses. Taking a look at there, really good. Didn't trade Friday, so that can be a good thing. You don't have to trade. Trading is not forced, right? You don't have to trade. Trading is optional. But good statistics on this one. Not too much to go over. If you want me to go over more, put more details in there. Put a lot more details in when you share your statistics. Let's take a look at this. Express accounts is preferred. Not so much combines, okay? Not so much combines, but here is a combine since I have it up. Might as well. So here is a trading combine. And talking about an edge, right? Let's go through and let's review some of these statistics. Good risk reward, 1.5 over 1.5. So that's really good. Consistent. There's that consistency. So consistency is absolutely crucial. Looks like this one's a scalper. Reviewing, small losses. You have one really big one to start off. I'm trying to look for that. Micros could be considered an edge, right? Micros and money management is part of that. Let's see. Negative week 3. I'm not sure what you mean on that. Go through this. Yeah, post in the chat and then let me know. Put the more details and the more descriptions you have, the more likely I'll review it, and I could give better feedback. Let's just say that. I don't know. What does the chat? What does everybody in the audience? What do you guys think is a good edge? Or as a trader, what would be your edge? I'm curious. It's not a poll. Let's just see you type it out. I'm really curious. Fridays and Thursdays. So your JTrade says maybe specific days of the week. specific days of the week. I mean, yeah. What's your unique advantage there? Maybe that's edge is not the right word. Losing money. Buy when price is rising, sell when price is dropping. Don't be sensitive. An unbiased read. Yeah, being unbiased could be it. Patience. Yeah, patience is I'm seeing that a couple times. Patience. Patience will definitely set people apart. 100%. Being patient. I think we see it all the time. All the time. Whenever you get into a trade and it goes against you, it runs your stops. And you're like, man, if I should have waited, I would have had a better setup. Self-control is an edge. Stopping after 2 losses. Okay. Patience again. Wow. Patience. Discipline. DCAing. Yeah. Learning to not DCA. Okay. Yeah. So I think what I'm seeing here, and what a lot of people are starting to say, I mean, you have, some people just going, and to each their own, but patience, discipline, and knowing when to trade. Risk management, of course, time, experience, following the rules. So is that fair to say, if we were to put, let me do this. You probably won't be able to see this one, but if we were to make a list and ask yourself, what is your edge, or name a list of advantages. Yeah, that's such a small, I don't know how to get that. We could even type this up and just make a list of things. I'm really curious. I don't know why I can't get this. Can I? Yeah, I can't get that to zoom in, but maybe we could just pull up a Word document. Yeah, I'm gonna just do this because I think this will be. Oh man, that is bright. I don't like that. So let's do that. The low is holding. Yeah, I'm watching. We're watching NASDAQ push. Yeah, right back up. So what is an advantage? Because I want to talk about some of these. I think it's important, and I think it's going to be good to talk about. I'm going to make this nice and bold. Yeah, I'm sure that came close to a lot of traders' stop losses. I'd be curious to see. Did that stop you? Did that stop you out? Come on, let's get this. Okay, so patience. Forgive my spelling. Yeah, I'm going to talk and write down some of these that you guys have been posted, and I want to talk about each one of them and why, because I think it's important. So a lot of reasons why patience is an edge or is an advantage, and just simply having patience can make someone a better trader than another. It really can. This leads to what? Not over trading. And can you guys see that okay? Is that, can we make this bigger? Should that be bigger? Sure. So immediately, it's almost like emotions, right? Handling and knowing self-control, handling yourself, how you are as a person can be a way to become a better trader. And here it is. So not over trading. You're taking better trade setups. You can find better risk rewards, right? Which also is better entries, right? You could avoid, what we call it. Avoid bad trades. And I'm just brainstorming. I'm really brainstorming. Better trade locations. Yeah, better trade entries, better trade location. Keep going. I'm going to, adding to winners is patience. Adding to winners is patience. Yeah, avoiding FOMO comes with patience. Risking too much. Right? I want to find everything that's associated with being patient. Being patient, predetermined risk. Patience is key. Holding winners. Yeah, there you go. Holding winners, like holding a good trade. You hold a good trade, or a winner. Patience. So, yeah, we'll work with this. Let's keep this. We're gonna go. Yeah, we'll make these other ones, right? Discipline. But let's keep finding, because I want to talk about this. Patience, not over trading, better trade setups. Yes, finding better risk rewards, better location, avoiding bad trades. You could be patient on doing that. Adding to winners, avoiding FOMO, holding a good trade. Ellie, it depends on your strategy, right? But if you are in a winning trade, something like trade management, you could let the trade play out. Having a strategy, have a plan. Yeah, so having a plan. Trade location. Better locations. Yeah, better location, better trade setups. You find better risk rewards. You avoid FOMO by being patient. And so discipline, having a plan. So let's talk about what are some things that comes with discipline as a trader. Now you think, I'm not talking anything about the markets. You guys realize that? Like, this is nothing to do with where do I place a trade, what indicator, right? Well, I'm not talking about an indicator. I'm not talking about a 3-bar reversal. I'm not talking about a specific market. I'm not talking about a strategy. We're talking about we can gain an advantage simply by managing ourselves as a trader and being disciplined, having patience, having a plan. And all of this will set you and set us as a trader a step above the next person, right? And so this is just as important, if not more important, than just having a good strategy. Like, I could show you guys how to buy a 3-bar reversal on a dip. Like, I could show everybody here how to buy a dip, right? This is what sets it apart. I think we've seen it today in the house account, everybody. And I'm going to be brutally honest. Today just sucked. This straight up, it sucked. We got in an amazing position, and it was an amazing trade. We were up $30,000. Okay, and in the house account, $30,000. Okay, there was a point where if we could have just locked it out, like closed it, and we would be sitting here celebrating one of the best days in the house account to date. Up 30. Oh, it was up. Lewis said at one point up $40,000. Okay, so that would have been amazing. Okay, now there's always going to be hindsight. Where what if it would have, we were looking for it to sell off, and it could have easily turned into a $100,000 trade. Simple as that. However, if we're going through this, being patient, being disciplined, having a plan, going through this, I feel like there was ways to trade that, right? So, yeah, of course there was some technical issues, and closing out. Let's get back in, doing this, doing that, and then after that we were looking to trade. And there's so much that that goes on in a trading day, but discipline. So that could also, what comes with discipline? I think see money, take money, right? So controlling greed, control emotions. And that could be like greed, fear. Yeah, greed and fear. Those are some emotions. Yeah, that is, Jocko Williams. There you go. Discipline equals freedom. Only trade with an edge. Well, we're talking about this. What is our edge, right? 2-to-1 put call ratio. Emmons are not going to pay. Let's go through. What comes with discipline? Control. Oh wow. Control emotions. Avoid FOMO, right? Avoid bad trades. It helps. Oh, let's go through this. Avoids, what do we want to call it? Too big of size. Yeah, you don't want to too big of size, right? FOMO. Oh, here's a good one. It helps avoid revenge trading. That's a big one. That is a big one. I need a chat can be good and bad. It's distracting. And I maybe there was I don't know. Maybe there was a little bit there was a bit of greed today during the fast market house account trade. I think there was some greed. I will admit there was some greed on my part because I wanted to hold a trade. And Friday, Friday was an amazing trading day. Coach Jay and I, we had an amazing trade. We held it. It worked out amazing. And then today, I thought we got into a decent position, and I seen that the market could sell off even further. And I think there was some greed that came into play with today's house account trade. Reviewing it, I realistically could see, maybe we could have even found an argument and a voice of reason to close half of it for profit, locked in 15,000, and then trail the rest. And, hey, we're locking in profit, we're managing risk, we're up 15,000. Let's go ahead and trail the rest and, trail it with a stop loss. And if the market sells off, great. We hit a great winning trade. If it pulls, if it reversed like it did today, then maybe we just get stopped out for a smaller profit on that one or break even for the rest of it. So there is that was definitely coming into play. It's hard to know. I know myself, I felt that a little bit myself, and so I will definitely say that. Which is funny because I'm always a bull, and I'm a perma bull. I'm bullish, and yet I was getting greedy over a short trade, which is weird to think. It really is weird to think that. So anyway, anything else that could help us as traders? Like, this is part of our advantage, our edge, our quote, edge. We're going to do quotes. Edge. Oh my gosh. So there you go. Yeah, revenge trading. So there's a lot that simply being disciplined as a trader could do that, right? So yeah, you still have to have a good strategy, but who in here in the chat can say, oh, I'm a decent trader. It's just I happen to revenge trade. I traded too big. I'm sure everybody in this chat could pick one of these out and say, oh, I would have made money, or this was, you're trading good, and then boom, something happened, you got FOMO and you missed out, or you do this disciplined. Avoid over trading. Yeah, it's okay. Some of these could have overlaps, right? You don't over trading, so you can definitely avoid over trading. Yeah, so there's accounts that I see all the time where you're like, oh, you're trading good, you're almost going to pass a combine, and then you take a loss, and instead of continuing following your process, you end up either revenge trading. You're like, oh man, you have to make it up, and you revenge trade, and then you blow your account when you were so close to passing a combine, because your strategy could be good. It's just one of these things could take a good strategy and just blow it up. Exactly. Yeah. And now remember, you have to have, this is the hard part about trading. This is why I say emotions and the psychology side of trading is the hardest. One of these, just one of these, will blow a trading strategy up. One of these. So that's what I'm saying. You don't have to be good at, like, you can't just be good at one, right? Like say, oh, I'm the most disciplined trader. Oh, great. But guess what happens if you're not patient, right? You could be as disciplined. You could be the most disciplined trader and you never FOMO. However, if you're not patient, I mean, those kind of go hand in hand. But yeah, you can't just pick and choose. You always have to have this at 100%. And that's why I'm saying, as a professional athlete, professional athletes work on this every single day. Maybe not, I mean, discipline. Yeah. I would even say, I was going to say maybe not like some sports, but I think all sports, like, there's an argument to be made, like every single sport and every single profession at a professional level must be prestigious at patience, must be prestigious at discipline. Think of the best of the best. And I know we always joke about Michael Jordan, and we joke about who's better, Michael Jordan, LeBron James, or Kobe Bryant. But every single one of the GOATs, every single person in the Hall of Fame, anybody that you guys look up to in any sport, they're the best at this. They are one of the best at this. Are they not? Yeah, does that, so yeah, I'm trying to think of an example that is not true, but yeah, any basketball player, any soccer player, any football player, any hockey, any professional sport at the highest performing level, they master this type of stuff first. And they have a plan, right? They have a plan. They have a plan going into a game. They have a plan going into whatever they do. Heck, I'll even say Magnus Carlsen. One of the best ever in what he does in chess. Same thing, patience, discipline, plan, and then the execution and what happens while they're doing it is all of this stuff, right? Real world examples. I mean, you see it all the time, right? Usain Bolt, everyone. You have to have a plan. I mean, there's stories about Dennis Rodman, one of the greatest rebounders of all time, where he'll stand underneath the basketball hoop and look up and count the rotations of the basketball. And yeah, that's what it is. Discipline, having a plan, having the patience, right? So every single one of these things is preparation to prepare for when, right? When you look to perform. Like trading is our game time, I guess. I'm looking at, struggling to find words here, but yeah, we prepare and we make sure that we're 100% at all of this, right? 100%. And I could go through and I could do 100% on every single one of these. Like you can even make this as a checklist, right? Just check, am I disciplined? 100%. Am I patient today? 100%. And if you lack anything, maybe you could tell yourself not to trade. Like, oh, today I'm emotionally feeling like I'm at 80%, for whatever reason. Maybe you're tired. Maybe you had too much to drink. Maybe you had something like that. This is like, if you feel like this, don't trade. Just don't trade, because when it comes time to perform, you want to make sure you're at 100%, because preparation leads to the performance. This is our court. This is our arena. here in a trading platform. So I hope this makes sense. I did talk a lot about that. This YouTube is recorded, but yeah, preparation. We're professional athletes. Our trading platform is our arena, and that is as cheesy as it gets. But it's reality. It really is. It's reality. This is where we perform, and there's our scoreboard. I'm not performing well because I threw on that trade as an example. But yeah, this is the scoreboard. At the end of the day, what matters, right? This is the scoreboard. This performance stats is a scoreboard. When we look at this, when we review our statistics, this is a scoreboard. And yeah, it will tell us how we are doing and how we're prepared and where we're at. So yeah, where's the cheerleaders? I'm looking at them. I mean, I don't know if it's the cheerleaders or the haters, right? Where when you go to an away game and you go into arena and say you're a Green Bay Packers fan, you're a Green Bay Packer, and you go into the Chicago Bears arena and everybody boos you. Imagine how that feels, right? You go into an arena and you're going against the opposite team, and the entire stadium wants to see you do bad. And the entire stadium wants to they boo you, they throw stuff at you. And then you have to still go out there and perform. Sometimes that's what it feels like on TopstepTV when we're trading, and sometimes you see people in the stands, in the bleachers, so to speak, the YouTube chat, and traders are over there booing you and saying you suck, fade you, do this. And I'm like, you just really just have to focus, right? So you always have that, and then it's nice to always see the people wanting, like, cheering and chanting you. They call it the 12th man, or they call it that uplifting. And to be honest, there is something to that as well. It's always nice to see positive stuff in the chat. Makes you feel good, and brings up those emotions, and brings up uplifts you, I guess. Every Friday, yeah, fade you Friday. It does have to suck, but it is motivation. I enjoy it. I really do. I enjoy all of the comments, positive, negative, constructive. That's why I'm not too quick at banning people. I don't like to ban people in the YouTube unless it gets a little bit too crazy, and then I just time them out for 24 hours or whatever that gives you. So anyway, that being said, we got a little bit sidetracked, but I think that's okay. Markets are always going to be there. Nothing too crazy. Yeah, gold pushing up again. So anyway, take care, everybody, and I will see you tomorrow during Power Hour. So tomorrow during Power Hour, I will see you then. And if not, it will be tomorrow during Slow Markets. Take care and see you then.